Welcome back. Have you all been doing very well? Lots going on in the news, as always. So let's start off with. I think the topic of today, anyway, is going to be Bitcoin. But for the meantime, we're just going to start with Greece again because that's got so much mileage on it. Endless talk. So with the Greeks, they have been trying to nail out some kind of agreement with Europe to send back to their citizens for approval, basically. So we've got some certain issues going on here. Now, when they first had the referendum and they said, right, okay, this is the mandate that we're going to the Eurozone for to ensure that we get some kind of debt relief and we'll get some haircuts, we're going to get we're going to protect the pensions, all those kind of things. This is the way we're going to do our stuff. So they took it to the Eurozone, and obviously now the clock's ticking, money's running out, the banks are like basically shutting shop now. How are you gonna make your the whole system function? Most importantly, if you don't have the element of force in your government, then there's no way of you ever carrying out anything like tax collection or any of those kind of important things to get everything kicking off. So, you're in a very tight spot now, and even though you've got this referendum, which is meant to have settled exactly how you're going to do things, it's not necessarily the key and the answer, and it doesn't solve any of the problems because you've got the German finance minister saying no way, they've got away with too much over this time, and we're not putting up with this much. They're definitely going to have to pay less to the pension funds, all those kind of things. You have this one was a little bit worded to me, so I'm not 100% sure whether this is factual or not, but there's a setup of an asset fund which enables potentially the Eurozone to access, and that has maybe connections to the revenue stream from tax collection. I could be totally wrong here. It makes total sense because Greece has not delivered on promises before, and seeing that they have access to these accounts, that would make a lot of sense, giving them a lot more security. There's less element of risk, less chance of the Greek government saying, no, you're not touching our money, this is ours, we're going to keep it afloat. So maybe that's part of the bargaining chips. It sounds like pretty much whatever the referendum and the threat of Greece bailing out, I think basically the Eurozone has said no way. And I think that's mainly coming from the German side of things, which are just saying, we've had enough of this, you got to like play to the rules. The leader of Greece is basically in a situation where he was hoping for leeway. There's no way that he would be able to really. He could really consider running chaos. I believe he's got a energy minister or a minister that's very left wing from his perspective of the party. And he was not happy with the original mandate that they were taken to the Eurozone, so he never signed the agreement. And then on the other side, he had his defense minister, who I think came together as part of a coalition, and I guess the actual mandate didn't fall to his his beliefs, whatever his thoughts were. So he never signed the agreement either. So seeing now that the leader of Greece has just basically come back with a mandate that neither of his major ministers from both sides of the political persuasions agreed to, and now they've both become, and now that agreement's come a whole lot worse. He's got sort of a bit of an infighting situation inside his party, and now he has to put it to a citizen vote to see if they will agree with it or not. So that's a bit of a tight spot. From the Greece perspective, like the people on the street, that they're obviously in a bit of a panic state. As soon as they're getting cash out from their bank accounts, seeing that cash would have potentially just stayed in that account, and they potentially could have converted it into a drachma, which would have just crashed in value. They're trying to get those euros out as quickly as possible. And then potentially, I don't know whether they're doing this. I think the euro will obviously remain a lot stronger against the drachma. If they did reissue it, is just to convert it into hard assets, particularly things like your essentials, oil, food, staple goods, tin foods, things like that, where you can just offer to trade in the future. Which sort of makes sense, but it does sort of highlight the panic that sets into a nation once it gets to that point. There is, I don't think things could ever really quite come to that, not at this early stage anyway, because in the old days when there's like running out of money and stuff like that, you do have things, government initiatives usually called soup kitchens and things like that, so that you do get at least one good meal a day and all those kind of things. I know obviously that's not exactly ideal, but you'd never really get to that point where you have complete chaos on your hands. But neither way, you do have to obviously see the perspective of the panic and the extent of which people will go to. And yeah, that's very concerning. I think the markets have obviously are still thinking that this is sort of a done deal and it's all going through. So it's interesting from that perspective. I wonder what the Greek people are doing now. So I guess you've got the two sort of. If you could draw a line between the two, you've got maybe three. So I would say the major one is you've got the youth and the old. So the old saying, right, here's my pension funds. I don't want to start working when I'm older. I don't want my funds diminished. I'm just about scraping through, and now you're just cutting me back even further. Then from the youth side, I mean, they're young. They haven't really got much work. Crash the system, start again. Let's reset the button. We can kick it off again, and I can start accumulating my own wealth and assets and create my own family unit from scratch. So, like from a youth perspective, I mean, obviously you've got the one area in panic of what you do with your elderly and all that kind of stuff. But from their perspective, it doesn't really matter too much, but you do have the national pride. So you might have a lot of young nationals which have sort of been spoken to and said, oh, okay, well, you're the Eurozone, they're fighting against you. They're all they do is extract more and more wealth from us, and they're just pushing us down. It's just a fascist state that is just monopolizing us. This is what greed does, and because we're a left communist party, we know how to look after each other. This is not the way. This is disgraceful how you treat us Greek citizens. We're sort of the start of the Western ideal, and look where they're pushing us. This is intolerable. We shouldn't stand for this. We we will uprise against this kind of behaviour. There's no way that we should put up for all of these embargoes from these other nations ordering us what to do. Why should we stand for this? But I think even the rhetoric is probably even harsher than that. So yeah, if you want to sort of get the youth and the people that are easy to sort of swindle, you can really sort of stave that up. And I must admit, I was when I was a lot younger, I had a bit of fair bit of national pride and all those kind of things, and it was easy to press my buttons when I was a lot younger. So you got to watch out for that one. So they're your sort of three dynamics in the decision-making process of whether they do agree to the mandate. And yeah, if I look into my crystal ball, I'm thinking that there's potentially going to be a kickback. I think there's worry, because obviously the worry of things not happening. The money situation and all those kind of things, and the panic that way. So that is interesting. On the other hand, we have Bitcoin, which had crashed from a great height of about 1,800 to a US dollar, and it went down way below, probably like, I think it was even approaching like 200s. And then we've just recently seen with all the Greek news, potentially the China news as well, that the market sort of started to rise up again. It's reaching like the 300s. Now it's dipping down again, just because they think the referendums come. Well, there's been a sort of agreement put in place, but that's the Bitcoin situation is very interesting, because we have a problem of debt spiraling out of control, administrations which have accumulated too much debt over time. The monetary system is crashing. The banks are not able to pay out the bank accounts, because they've actually run out of the money that's in your savings. So they've run out of money in that way, and you've got the resources of getting gold and jewelry, which is okay. It's definitely the historical means of holding value. Yeah, if you're going to go down to your jewelers and exchange it, they're going to take a nice fat chunk of change, or they're going to take a nice little percentage out of what the actual market price is of gold or silver or platinum. And if it's like a nice piece of made jewelry, they don't really take that into account. They usually just look at the cost, the weight value of the items. So the system is sort of crashed on the weight of debt that it owes. The system is down, and you have no real means to exchange value. So what can you do at this point? So if you had access to Bitcoin, so Bitcoin's is a cryptocurrency which is open source, which is not owned by anyone. It is it's basically anytime that's it's like peer-to-peer sharing, when you go and when people download illegal videos and things like that. It's that kind of style of things, but people are on an exchange network. So with Bitcoin, how does that compare to your normal paper currency in exchanging goods and values? So when you use money, you you have only one reason why that money is good to use, and that's the state saying that that is legal tender. So it has the power of force, which is like your police force, your military, and stuff, to say that under this domain, under this land area, this is the legal tender for which you can pay a person with, pay the bearer, and all those kind of things. That's the only thing that really sort of enables us to sort of exchange goods, and the means to exchange goods is the power of the state to say that this is real money. This is how you exchange goods. Now, where does Bitcoin have a comparable measure where it has that sort of power of saying, okay, this is enforced in this way? Now, the crypto, it's not like a crypt keeper, like some kind of ancient mummy, but a cryptography, which is basically a highly advanced password. So when you try and crack a code on a safe, that's, I guess, the system that works there is the same with cryptography, but the cryptography is such an advance of numbers where you're just saying that for every like third number, the one number moves forward, and things like that, so that you have an impossible sort of number of outcomes of what each code is. Now, what is actually being locked up in this cryptography? There's a couple of things. So the network cannot be hacked because, and this is called the blockchain, but I'll just go into that in a second. So what you have is you have a means to exchange. It's like a bank's exchange sort of system where you can transfer one piece of money over to another person's money, and that the channel that is done is on a blockchain, and a blockchain is using one of the highest, most sophisticated levels of cryptography, which means it's pretty much impregnable to any hacks. If I try and transfer from one account to another, that can be easily done, and it's not necessarily that, when you have your credit card, it's got that account number that's written on the front of it. It's not necessarily just one account. You can have multiple channels of accounts which can tie up to your one single user account, so like your sort of main umbrella account. So you can have multiple accounts, so people won't necessarily find that all your money is stashed on in one place. You can hide it in multiple accounts. People would need to know, firstly, your initial login ID and your passwords, and also there's a couple of things where you need sort of like one thing I recommend is Bitcoin Armory. That's actually like a system where you can have like a printed off copy of your passwords and everything else. It's this massive line of maybe like 50 characters, so it's literally impossible for you to sort of just hack into that kind of thing, because the combinations will be going into the multi-trillions. And so in the terms of account hacking and you trying to steal anything from the other person, that's impossible. So we've sort of defined that the system that it's running on is a fully crack-proof system of exchanging of value. This value element we're trying to just work out as well. So what is the value of paper currency? Now, in the old days, paper currency was exchangeable for bars of gold and silver, I think the American banknotes used to have sort of exchange for the value of this much gold and all that kind of stuff when we had gold-backed currencies. And when we had those that means of exchange, you obviously had paper that was worth the value of things. It was like a coupon note, every piece of and then obviously if you remember, obviously we got lots of coins as well, and the coins were silver coins, gold coins in the past, actual precious metals, but we've switched that to nickel and brass and all those sort of elements which are not really worthless anymore. But everything had intrinsic value to them. Now, we don't have anything like that. We only have the consumption of the power of the state, and the state will use those as legal tender. That's pretty much all the value that you're attaining in that system. So it still remains just as a means to exchange value. Now, with bitcoins, from somewhere, how does it become something of value? People must have just gone, okay, well, what's this? I'm going to buy, I guess at one point, 1,800 for US dollars for one Bitcoin. So from somewhere, it's attained that kind of level of value, and obviously crashed again, but it's working its way back up again. So what originally happened, I guess this is maybe the hook of it, is every there's a release which occurs, I think pretty much most days, of a certain allotted amount of bitcoins. These so let's just go from the very beginning. So originally you could have these like applications which run on your computer, and the application would try to crack the cryptography code. I know this sounds quite shocking, but the cryptography code was only a certain number. So it was let's say it was only 4 digits at first. So relatively, it was fairly easy for you to attain bitcoins at the very beginning, if only it was all there at the very beginning. And then, so basically, your computer would run through every combination of passwords or safe codes until it could find it, and there wasn't any means of like an easy way of hacking it. It just run through multiple combinations. Now, this running through application started to get more and more sophisticated as time progressed. You required more and more digits. So when I say this open source system called Bitcoin and the blockchain has got certain devised mechanisms inside it that it only allots a certain amount of bitcoins every year. So when you increase the money supply to a system, it is inflationary. But Bitcoin doesn't have much in the way of coins which are released into the system, nowhere near to like what central banks do. And it's actually going to finish releasing bitcoins at a certain point in the future, maybe 2020 something or 2030 something. It will literally just be a non-inflationary means of exchange of value, which means that people are going to be a little bit more protective of their coins, because when we hold normal currency, we know that for the next day everything's going to get a little bit dearer. Maybe computer technology will get a bit cheaper, but generally everything else will get a little bit dearer. We expect our gas prices, house prices, everything else to get a little bit dearer. So that impulses us to purchase things in the now and increase productivity, which is always a happy thing for the government, but not necessarily for the environment. So baked into the system, we have a certain allotted of amounts of bitcoins. You have a number of guys, and a few ladies as well, kicking in, and they're cracking these codes, and they're attaining a number of bitcoins. These bitcoins haven't been put on an exchange, so when you go to a currency exchange, you can swap your euros for your US dollars, those kind of things. That mechanism wasn't even in place. So there were certain platforms like Mt. Gox, which enabled you to do some conversions. Just before I mention that, though, one of the sort of like the funny stories was that there was the very first exchange that would ever happened was somebody in the UK purchased somebody a pizza for something silly like 1 million bitcoins. So they so this is the very start where the bitcoins were worth literally nothing, and the exchange of value happened there. Both of those sides thought that they were going to profit greatly from either of the two, and hey presto, the means of exchange of value has occurred. Now it's quite interesting the fact that why would that person in the first place even perceive any value in the exchange itself? Now maybe so let's just say that we're all computer geeks and we're all just clicking away and we're password hacking and we're obtaining bitcoins. Maybe this currency, I'm not sure whether this because I remember that this if you remember Mt. Gox, they were mainly sort of a company which dealt with exchanging things on Magic the Gathering, I believe, which could have been some kind of virtual place where you exchange sort of coins and stuff like that. So maybe in some realm or some area, Bitcoins was used in a virtual level. So maybe there was some application there for those Bitcoins. Maybe it was just pride to say that I've got the most Bitcoins on the system so far. This is a new technology. I'm the most successful person at obtaining Bitcoins. That sort of pride thing. I know obviously there was when the first papers came out about this, that they said that this was the person who released this, I think Terragoshi Yamamoto. I can't even remember what the exact name is, but it's not really known whether that is the correct person or not who actually released it. But it did say that this to do with central banking and bank failures and all those kind of things. This was the system that could save us from all these problems. So maybe people perceived that there was some kind of ideal there. So yeah, anything. I mean, who knows why things are collectible from something, from somebody's garbage to somebody else's thing is not really known. But from that point and that perspective onwards, there was a perceivement of value, and it didn't really matter. Like from a Bitcoin's perspective, it doesn't really matter too much as to what the Bitcoin is worth. Even if it would probably be fairly nice if all the Bitcoins were worth like 50 cents to a US dollar and just pretty much remained at that point, around roughly at that point, and let the US dollar sort of inflate its way from that point. But it doesn't really matter how much it's worth. It's a means to exchange value. That's the more important thing. So now there is some kind of perceivement. Once the pizza is purchased, then there's some kind of value behind this, and then maybe some people are saying, okay, well, I've got this amount of Bitcoins. Maybe I can just get $5 and I can purchase this this song online or something like that, and maybe there's just been these tiny little exchanges. People just, and I guess you know when you like collecting cards and stuff like that. From that point and that perspective onwards, you're going, oh, okay, yeah, we can collect these cards, we can do this, and then there is some kind of exchange of value which is going on from the collectible aspect and the means of which people are thinking, okay, this is we can use this for something. Now, once that kicked in, there was sort of an exponential rise in the actual market value of bitcoins over a very, very short space of time. And once the media picked it up, that and once people really sort of and this is, I think this is the main draw as well of a lot of people, is that once there was a kick in of some kind of value in the currency, and that the fact that we know that most central banks will inflate their currency and bitcoins are restricted to a certain determined level, which wouldn't really ever sort of match the level of which bitcoins would rise, then people just realize, people have just gone, okay, well, these bitcoins are going to be worth a hell of a lot more in the future. And at that point, people, speculators have gotten on board, and from a little bit of exponential rise, there's been humongous rises in the Bitcoin exchange. So you sort of have the value element. The value element, again, is not necessarily the most important part of Bitcoin. Especially when, for Greece's perspective, and when banks fail, the volatility is probably one of the most major problems with Bitcoin, where the value of the Bitcoin astronomically rises so high and then it crashes again so quickly. So you do have that perspective as well. Then you have, what do you have as well? Yeah, one thing to mention as well is, so yeah, the value element is not important, especially when it comes to adoption and people have a means to exchange of value. It doesn't really matter what the value is, as long as the volatility doesn't kick up and kick down, so that one day that your bitcoins in your wallet hasn't just shot up to, like, one bitcoin's worth now like 50,000, and the next day it's worth $50. You need to have sort of that stability in the market, and the idea is that as there is more and more widespread adoption of the bitcoins, you will have a less volatile market, and you will have stability in your means of exchange. So that's from that perspective. So we've sort of underpinned a couple of points. We understand how a Bitcoin is produced. We understand how Bitcoin is a means to exchange value. We understand that the Bitcoin network is non-centrally backed. So the important thing about that one is that obviously when you get a central bank controlling the money supply, you have an issue with price discovery, because you're trying to work out how much one item is. Now, if we just had a flat currency, this is how much this is how many coins are in circulation. Let's say it's like just virtual coins, so you can never really sort of run out of the coins. It's not like cash, which can be buried or anything like that. We had a certain amount of virtual coins in the system, and that was our system to use, and they can never be lost. Then we wouldn't have anything like inflated prices unless there was a sufficient shortage of supply, or there was elements of like other things like credit expansion and banks, which this is not explaining it too well, but yeah, if we had just a flat non-inflationary currency, then you could understand how the market works, and you'll be able to get fair value for most items, and you wouldn't have inflation of goods every year. So you wouldn't have your house prices, all those kind of things, inflating out of control. Might get credit expansion a certain extent, but that would be highly limited in the sense that the bank would instantly fail if it was lending out far too much money on its books. And those kind of things. So, yeah, I was just thinking of that at the time when I paused, but it would massively stabilize the market. It would be absolutely tremendous for the environment because people wouldn't necessarily go out and start spending frivolously. Remember those sort of ideals where if something got broken, you get a replacement for it. You wouldn't necessarily think that way any further. You would start going to yourself and going, okay, well, this needs to be repaired, because I wouldn't want to sort of get all this. I wouldn't be able to produce all these cheap goods all the time, because you would have so much more price stability in the market. So, yeah. That would have an incredible effect on the marketplace, on a lot of things. People will obviously be able to be far less materialistic. There'll be less fads going on. People would be looking after their own possessions a little bit better, just to ensure, because if something broke, it wouldn't be replaceable straight away. And everything would sort of be priced at fair value, and you would get some really strange anomalies, like house prices would go down in value. Now, obviously, land price goes up, but the actual item, the actual thing that it was built on, the house, that gets gradually over time, like a car, gets older and decrepit, requires more repairs, and so therefore that house price would generally go down in value unless the land value was pushing it up so high. So that would just be a natural occurrence in that respect, and you would expect, unless the population growth was shooting up and there was massive credit expansions, which doesn't necessarily happen either, you wouldn't expect the housing market to go way out of control, and so you would expect a lot of price stability in the housing market. There's just many factors which would kick in once you have a non-inflationary currency. Now, maybe people say, okay, well, this inflationary currencies are very good because you can kick off a new business. There's more of a chance that you can grow from that. You can gain fast cash and credit very quickly, and all those kind of things. But for a price discovery perspective, which I think is one of the major drawbacks that we are in at the moment because of too much central bank lending, is the fact that you have house prices like out of control, people just attaining more and more credit, and this is because the central banks can endlessly sort of allocate more and more funds because of their the credit expansion, which can go down to the investment banks, and then the investment banks can lend to the retail banks. So you have endless credit expansion to pump up the bubble. Now, if you didn't have that ability, then the market has to discover price fairly straight away. And before anything would be able to get out of control, like credit expansion, you would have the reins of money tying us up correctly. So again, that's again the essence of why Bitcoin was created in the first place, to put a reins on the central power which can manipulate price discovery in a free market ideal. the next part would be with Bitcoin. If you can just perceive it as sort of to summarize, so if you can use Bitcoin as a means of exchange, you can go around. I mentioned on a previous podcast that you can just memorize the code. If you can use some kind of like pattern recognition of what each number represents and letter represents, then you have the ability to memorize a highly complicated account, and you can walk past barriers. The cryptography cannot really be hacked unless you literally physically can take the computers away from somebody and then use it to transfer it over. There is just multiple sort of perspectives. Going back on the hacking side, I believe that if people it's best to attain your bitcoins in some kind of cold storage mechanism where you can take your bitcoins onto a computer and then just disconnect it from the internet, and then you exchange from the non-internet based computer onto the internet based computer to then use as a transfer mechanism. That's what's stipulated as the safest method of using it. So you're basically like using a safe. So whenever you're hooked up onto the internet, that's when the risk is involved. It's meant to be that it's cold storage is the more preferred method. So just that's one thing to be aware of if you want to be 100% safe in the way you do things. The governments also, obviously, with governments, they do this thing called guarantees of deposits, guarantees of all those kind of things, so that if there was banking failure or banking runs, that they would stump up the cash, and that sort of that just makes people that again just distorts the market in the respect that you just put your money into any sort of bank, and then you know that the government's going to kick in and start bail out any situation, until you get to a Greece scenario where they don't have the money to bail out any of the banks, and if anything, they need to just extract all the wealth from those funds. So people just become a lot more frivolous with where they put their money. They don't care. They just put it in the bank. It's not really earning much interest rate. It's a facility where they can go on online banking. They can use their credit card everywhere, and they can exchange goods. Now, as Bitcoin gets more widely adopted, then obviously you have the capacity where you could use it as like a credit card based. And Bitcoin can be baked into your mobile, so you can get mobile applications where you can put a micro light wallet where you can just have a little bit of funds on there, go outside of the house, take it off of your cold storage computer or pad, and then you can go around exchanging values, all those kind of things. So it's great in that respect. Next problem. So once everyone got in Greece, imagine if Greece all of a sudden said, right, let's just start using these bitcoins. These bitcoins seem to be doing a lot better than our drachmas, which are just crashing in value. Let's just convert all our stuff into that. They're using that as in their economy, and that's fantastic. But because it's kicked out of the banking system and, most importantly, the taxation system, governments do not like that in that respect. You shouldn't really be able to, from a government's perspective, they would not like you to start paying all your workers in bitcoins and using that as the means of which you exchange goods and value, because there is no tax extraction mechanism put in place. A lot of employees have this mandate where you pay tax via every other system. So if you do get new business startups and stuff like that, and they're not adopting drachmas or euros in the system, then basically that's obviously the essence of government failure, because once you stop the tax system, then you're over. So that's why even even though the technology has amazing potential in the market, just going over a couple of those points, the government's just sort of, they like it in the sense that the new market that it could potentially generate, which it potentially can create something amazing, but like in sense of creating an amazing new economy of marketplace, and potentially sort of redesigning the entire banking system. They like that sense, and basically capital allocation could vastly improve and all those kind of things. At the other end of the scale, it's a dangerous thing on them and their taxation haven. Now, just going over Bitcoin again, there's banks even sort of, they like the idea of Bitcoin, because one of the major drawbacks with the current financial banking system is that you have multiple teams in banks which do separate individual functions. So you have an accounting ledger where you have to book in your credits and debits into the system, and for every transaction that's quite time consuming, and you've got to get that audited and all those kind of things. So the accounting ledger is extremely hard. And then on the back of it, you have got a payments and settlement system as well, which you're running simultaneously beside each other. So they're two individual systems. You could have two different teams running those individual points. So when I say settlements, that is the exchanging of value points as well. So these are hitting one point to the other. Now, with the Bitcoin network, it is an accounting ledger. So the blockchain is an accounting ledger, which well, the interesting thing is when you download the Bitcoin network for the first time, it's actually the entire sort of account ledger of what has occurred throughout history, and it's about something like 55 gigabytes or something like that. So all your accounting ledgers and your means to exchange value is amalgamated on one piece of information. So banks generally, obviously, they dislike it because of the implications of the diminishing of the central banking system, so that they cannot get any cheap credit any further, and from the central banks, and that they won't be in a boys' club anymore, which they can redistribute the wealth and then they take the margins. That's the part that they do not like. And the part that they do like is obviously the amalgamation of the accounting journals with the means to exchange value, which is amazing. Also, there's escrow sort of things as well, where the lawyers don't really like this one as well, because you can set up sort of legal contracts where if I build a wall for you and it's completed, then there is we can create a system where it will pay on the completion of that, and maybe we could use a surveyor to assess our work once it's completed, and there's an escrow system where you could put the money with that surveyor, and then he independently adjudicates it and says, okay, this meets the requirements. And then once it's completed, he reviews it, and then he agrees that's all good, and then he transfers from the escrow account to them. So there's a three-way transaction. It's independently reviewed, and there isn't any sort of legal sort of recourse which occurs, which in the past you would have to write up these massive legal documents and all those kind of things. Now you can operate all these different companies which can do those legal contracts, in easy, simple legal contracts for the means to exchange services as well. So you potentially you're taking a blow to the financial industry, and a blow to the legal industry as well. And then the opportunities are endless. You've got potential for it's a very easy system as well, Bitcoin, to just like make donations. You just need to click on a button and you're all logged in, and it just makes it. It's fairly like the PayPal sort of network in sort of entering in money. You really have endless abilities of widespread adoption for it. To get on board. So that's there's some ideas for the Greeks to do that. Now, I don't think the Greeks probably will go widespread adoption on that. I don't think they're a massive tech sort of country, and they do not really. They're very cash based as well. So that's one of their good assets that they have in the sense of being cash only, that they can try not to hit the car. Cash only, and which means that they can be good in the realms of exchanging value. So, that sort of concludes the end of this podcast. I do have many other subjects which I can go over with Bitcoin. It's sort of like an endless topic which has multiple, like the Bitcoin network has multiple applications. And it just goes on forever and ever, and it's probably the newest field which I recommend any entrepreneur to sort of get involved in, because it's like the amalgamation. Like whenever you look at sort of the future of increasing production, you actually you have to sort of make things more efficient and improve systems, and that I can see that's one of the areas which can happen. So take a look at it. Get involved. Good luck, Greece, with the current situation, and we'll catch up tomorrow. Thank you.